Good afternoon, everybody. It's April 2025, and today I'm going to talk about the real estate market nationally, locally here in Raleigh, Durham. We're going to talk about the buy-sell market. We're going to talk about the rental market and what we can expect to see this spring and summer, as well as how current events are shaping and molding some of what we're seeing. One important thing to talk about nationally is interest rates. For about the past year, interest rates have hovered between 6.5% and 7%. Many buyers have indicated waiting for those interest rates to drop below 6%, somewhere in the 5 range, before getting off the sidelines and engaging again with looking to purchase a new home. However, recent current events, many of you have heard about these tariffs that are affecting trade nationally. One real estate consequence of these trade tariffs have been the raise of the 10-year T-bill, which mortgage rates are attached to. And as the 10-year T-bill has been ratcheting up over the past couple of days, so has mortgage interest rates. And the real concern is the longer this trade war continues, the higher the 10-year T-bills could potentially go, which means we possibly could see some of the highest mortgage interest rates this season that we've seen in the past couple of years, potentially. Certainly something to keep an eye on, and I would not predict, unless there's another current event to counteract this, that rates are going to go in the opposite direction in the next couple of months. But I'll certainly keep you updated. Days on market. Homes have increased nationally almost a full week, days on market, from about 29 days to over 35 days on market on average. What does that mean? That means while potentially interest rates may be going up, it gives potential buyers more options, more potential availability on the market, less likely to have to negotiate giving up inspections or paying over asking price. We'll talk a little bit about those further in the video. However, more days on market is one benefit for potential buyers. Home prices do continue to raise year over year, albeit at a fairly slow pace. Last year they raised between about 2.5% and 3.5% year over year. And this week, as we're into the 2025 season, we're seeing a very similar trend with home prices raising about 2.5% to 3.5%. Although you'll see some slightly different trend as we talk about the local Raleigh-Durham market. The Raleigh-Durham market specifically has exhibited resilience based on the strong job market and a influx of new residents. Currently, approximately 60% of all new homes on the market in the Raleigh-Durham area are selling for less than the list price. Days on market are reduced to only 20 days on market, considerably less than what we mentioned the national days on market are. Let's talk about the rental market in the Raleigh-Durham area. Vacancy rates are higher than the national average at about a 7.1% vacancy rate. And you might ask yourself, why would there be a higher vacancy rate? It doesn't lead to a weak rental market in the area. It actually leads to a huge boom that we've all seen in new construction, primarily in apartments and condominiums being built and are now open. Many of these apartments and condominiums have amenities that potential renters are flocking to. Let's talk about rental rates in the area. Currently, Raleigh has an average rent of $2,065, whereas sister city Durham has a rental rate of $2,150 per month. The rental market temperature, according to Zillow in the area, is cool. The rent in Raleigh in the past year has gone down $195 per month, indicating that cooler rental market. Right now in Raleigh, there's over 2,000 rentals. Raleigh's average rental rate is still 6.5% lower than the national average for rental rates, making the Raleigh-Durham area an attractive place for people to move for a great cost of living. Some of the average rental rates in the Triangle: Cary at $2,400 a month, Morrisville at $2,200 a month, Knightdale at $2,100 a month, Gardner and Fuquay both at $2,200 a month average rents. The average rents in the area are now well over $2,000. Should be no surprise. In summary, the real estate market right now is characterized by high mortgage rates, uncertain but slowly increasing house prices, and a somewhat cool rental market, largely based on new construction. As far as how to approach potential tenants this spring and summer and renewal rates, I would consider doing everything I could to retain good current tenants and keeping them in the property. That may mean not raising rental rates depending on where the current property is at. And if you do have a vacancy, to stay competitive, I would consider pricing the property competitively out of the gate and not looking for aspirational prices in the very beginning, or you may find that long days on market for vacancy may cause the house to continue to linger long after some of the ideal properties are snatched up.